Interest rates on home loans have never seemed more tempting, and your dream house never closer within reach. Did you know that India's largest lender, SBI, has even announced a concession on home loan rates by 25 basis points? Financial planner Raj Khosla believes that there is no time like now to buy property. To hear more from the expert, check out our video where we interact with Mr. Raj Khosla of mymoneymantra.com. But just in a hurry to make the most of these rates, you can land yourself in a debt soup. What's more, you could also make it tougher for yourself to get loans in the future which are linked with other financial goals. So you need to ask yourself these 5 questions before availing the low rates and be prepared for the risks involved. Number 1. What comes first, the home or the loan? What if you seal the deal with a broker only to realize that the bank will not sanction your loan? What if the seller wants to make the payment by a certain date and you don't have the money? EMIs are large and the down payment mandatory. What if you are unable to furnish those? To finance such a purchase, you must know all the facts, figures, and the loan details right. So before you start house hunting, find the right lender and conduct your due diligence. Check your credit score, the loan size you can take, processing fee and other levies, prepayment clauses if any. This will help you calculate exactly how much money you need in hand. Choosing the right type of interest is also crucial. You can choose from among a fixed rate, a floating rate, or a combination of both, which is offered by some banks. Number 2. Did COVID make you default on loan EMIs? Mishaps directly or indirectly due to the coronavirus pandemic and subsequent events such as the lockdown have hit many in the form of pay cuts, job losses, financial or health emergencies, etc. If you suffered any of these and as a result defaulted on EMIs on other loans or failed to pay credit card dues or are now living on a reduced income, all this will show up in your credit score and affect the home loan ticket amount you can avail of. So if you had planned a bigger loan according to your salary, you may have to rejig the calculations and go for a smaller house as per loan eligibility and the amount of down payment you can furnish. Similarly, after EMI defaults, if any, check your fresh credit score and loan eligibility before house hunting. Calculate the amount of EMI you will be able to service now. Number 3. Are you cushioned against other financial risks or emergencies? Before taking a big ticket loan, ensure that you secure all other financial risks. COVID itself has been an emergency for many, and given the ongoing uncertainties, you could still run into a financial setback. Some of these are stock or equity market linked losses to your investments, job loss or pay cut, sudden death or disability or illness in the family, etc. You must have in place sufficient buffer amount over and above your regular contingency corpus to tide over such a temporary crisis. Another smart move is that instead of taking a home loan linked insurance, take a term loan that covers the entire home loan amount in case of sudden death or disability. Number 4. Is your working partner a co-borrower and co-owner? Did you know that women get benefits on loan rates? Yes, they're offered lower interest rates than men, so it would be sensible to make your wife or daughter the primary loan applicant. Under Section 24B of the Income Tax Act, both spouses can claim tax benefit of up to Rs 2 lakh each on interest payment in case of a self-occupied house, and under Section 80C of up to Rs 1.5 lakh each on principal repayment. Having your spouse as a co-owner and co-applicant thus works to your advantage. It increases the tax benefits for you. And lastly, number 5. What is your reason to buy a house? If you are buying the house to live in and have enough funds for down payment and EMIs, yes, it is a good time to go ahead with the purchase. Interest rates are starting from as low as 6.7% right now. But when you are looking at it from an investment point of view, low rates should not be your guiding factor. The real estate market in a slump works to mar your returns in 2 ways. 1. Property may not appreciate anytime soon and you may not be able to realize the returns you are expecting. 2. The demand shock. It is extremely challenging to buy property buyers in such a market, and you have to be prepared to make a loss should you decide to sell your property. So if you were banking on the sales from this property to meet a certain financial goal, you may have to say bye to that thought. Our advice would be that you should avoid buying a house as an investment in the current scenario, even if the rates are attractive. After answering these questions for yourself and ensuring you are good to go home buying, you should know the jargon and lingo that builders and developers use while selling property. To know about that, check out our video where we will tell you about these very property terms. That's all from us for now. We wish you a happy and healthy home buying. Stay tuned with us for more personal finance guidance.